Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
As you can see, we're not in the office. We're in an undisclosed location at this point, which means it's not disclosed.
There you go.
We know where we are. We believe we know where we are. So anyway, there'll be hints if you watch the video. You every 30-second word, if you put it all together, it will add. It's every 69th word. If you put it together, it'll form a sentence that'll tell you exactly where we are. The first letter of the 69th word, it spells a word. Okay?
All right, let's go.
Okay, so what we're going to talk about today is if the looming number of office space that vacancies what effect it would have on the housing market. And this is from an article. The headline of the article is, "A lot of offices are still empty and it's becoming a major risk for the economy." Okay, so Juana, we have heard that the recession is going to be so bad it will crash housing. It'll just wreck housing, okay?
Okay.
So let's talk about that first. The theory is that office space will somehow crash the economy, and then the economy crashing will take out the housing market, and houses will be pennies on the dollar.
Okay.
So let's talk about that first. How does that work? Guide me through how that would actually happen.
All right. So we can start kind of with what's going on in the commercial sector, right? So we have lots of empty office spaces. So the theory is that the empty office spaces will cause the borrowers who purchase those properties to not make their payments, default on their payments. Once they default on the payments, those will be foreclosed. Who owns those notes? Well, those loans are owned by generally regional banks, smaller banks. That will cause them to have difficulties with their balance sheets. That may cause runs on banks the way we've seen recently, and of course that means that those banks will default, and there will be a domino effect, and all hell will break loose. Pardon the vernacular. I'm less than certain. We'll just put it that way. I'm less than certain. First of all, not every borrower will choose to default. So we'll start there, because not every borrower is going to be upside down, right? So that's kind of the first step. The second step is, let's talk about the ones that are upside down. Well, okay, so let's say that they default. If they default, what happens? Well, the bank has several choices. They can foreclose, as you know they've done in the past, or they can choose to do some kind of a loan modification. There are other options. The other option is for an investor to come in and give them some additional backing, and that would cause them to not default. So there are all kinds of options in there. So let's say that they do default. Then what happens? Well, okay, they default. The bank takes the property back. Well, banks are not in the business of running these empty spaces.
What would they do? What would they do if a bank took a property back?
Right. So if a bank took a property back, more likely than not, they would go ahead and they would sell it for whatever the market rate is for that property. Okay. And does that mean that the bank will be made whole? Maybe, maybe not. So let's say the bank is not made whole. Well, they probably have other investments to offset that, so they might be okay.
They also probably have SBA insurance if they did SBA loans. So the SBA government insures that loss to some extent.
Right. So there is some sort of a mortgage insurance the way you have on housing. In this case, it would be SBA. So that's a possibility. So there are all kinds of possibilities in there. So that's kind of something to keep in mind. Now, is this going to topple all the small banks? Well, of course not. Come on.
No.
They have other investments besides these, okay? So that's a little bit absurd. Will it hurt some banks? Absolutely. So we're not ignorant to that. But is this going to topple every bank? Of course not. The government has come in and they have backed these banks that have run into difficulties. They have made depositors whole in the past, and we can assume that they will probably do that going forward. That they've certainly set a precedence for that. So the idea that these banks will fail and that depositors will be hurt is probably not going to happen. That's not to say that the banks won't fail, but that depositors will probably be made whole the way they have in the recent past.
Okay, here's a couple quotes from the article. The next big potential risk to the U.S. economy may be lurking in corporate towers across the country's downtown districts. Mm-hmm. With many people still working from home, companies are cutting back on so much office space that it threatens to unleash even more headwinds for the U.S. economy. So they're literally blaming the people working from home is going to crash the economy because they should. I mean, if you think about it, this makes no sense. These companies are more efficient because now they don't look. These companies have said we don't need all this office space. If I had 50,000 square feet of office space in downtown San Francisco and determined I only need 5,000, I'm saving 45,000 square feet of space, which probably is, I don't know, millions a year in savings. And then if my competitor does that, I'm probably going to do it too. You know, our argument is do you get the value, right? If you're in a factory, if you're building cars, you probably have to be there because you have to like put the TV screen in the Tesla or something like that. But do you have to do that for most insurance companies, tech companies? You probably don't have to do that. So right. I just think it's odd that work from home, which creates some efficiencies. They can pay the people less. The people are not commuting back and forth, which I think is a good thing. And we've built up cities for all these people coming into offices, and maybe that's not the future. Maybe people aren't coming in offices.
Right. So, not that I'm a particularly green person, but I certainly appreciate the fact that people don't have to commute as much. That reduces pollution. That's a good thing. The fact that we have the possibility of spreading people out over a greater geographical area, which is good because now we're reducing density, which improves quality of life for everybody, reduces crime, does all kinds of good things. That's a good thing. So, having these empty office buildings is not necessarily a horrible thing. Now, the other thing that can happen is these office buildings can get repurposed, right? There are all kinds of ways to repurpose them. Government loves to pick up space at our expense, right? They'll pick up space probably in some instances and repurpose it for some other thing. You'll have entrepreneurs who will figure out ways that they can monetize this space, and that will be good. You'll have existing companies that will find alternate uses for the space. Maybe they'll use the space as temporary or permanent housing for their employees. So for example, if you have a 10-story office building, maybe you're using 3 or 4 stories for your office, maybe the other 5-6 stories get used for temporary or permanent housing for your employees. That builds builds loyalty for employees. That helps with retention. That helps with recruitment. All kinds of things. I realize that that's an expensive conversion, but I'm just giving you an idea of what could happen with these buildings. We have seen these conversions take place in some densely populated cities such as New York City, so they're not completely out of the realm of possibility.
Here's another quote. It's a troubling development for the commercial real estate industry at a time when the U.S. economy is already showing signs of stress and maybe even a recession. So we've had some people comment in the video that we're in a recession. Now we had people commenting since last year, beginning of last year, last summer. We're in the recession, Todd. We're watching the housing market crash live, right? And now we're in the recession. And I'm not saying we're not, but first quarter was growth. So we're in the second quarter, and then last month, which was the first month of the second quarter, consumer spending was up 0.4%, and then credit card debt was down. More people made payments on credit cards last month than used credit cards, which was interesting because it's the first time in I think 2 years that had happened. So, recession does not mean home prices crash. Because if that was the case, we were in a recession 2020. Remember that? What happened to home prices in 2020?
It went up.
Yeah, we had 2 negative quarters growth in beginning of 2022, but they decided to change it and not call it as a recession. Here's another quote. The bulk of the $1.2 trillion in office space debt is owed to smaller regional banks, which are already in turmoil from depositors fleeing to bigger banks. Okay. So that's 2 different things. One is liquidity. People left, and now they don't have as much money potentially to loan out. And the second thing, though, this $1.2 trillion in debt. So, do you get a 30-year mortgage when you get a office building? Do you go get a 30-year loan?
No, they're usually much less. They're usually somewhere around 10 years. Sometimes a little bit longer, sometimes a little bit less, but somewhere give or take about 10 years. So, but that doesn't mean that they're all coming up due at the same time, you guys. Keep that in mind. So that they're coming up over the next few years, not all of them, just some of them. And like I said before, just because they're coming up, that doesn't mean that they don't have equity, and it doesn't mean they don't have sufficient equity to keep going. I understand the interest rates are higher than their existing loans. I get it. But again, let's say that I have a $5 million building, and let's say that I owe $1.5 million on it. Well, even with prices being down, I still have quite a bit of equity. So I can refinance that and be okay. I'm not going to like my rate, I grant you that, but I can refinance that. And then I have other options too. I mean, I have the option of taking on other investors and dealing with it that way. There are all kinds of ways that I can deal with that debt. So just because a loan is coming up for refinancing doesn't mean that it's going to default. There are lots of options out there. And remember, these are people who are business people, they are entrepreneurs, these are people who are creative. Most of them will find a way to deal with this debt. Not all of them, okay? And I grant you that, not all of them, but most of them will. And the ones who don't, I'm very sorry for them. I appreciate the pain that they're going through. It's just part of doing business, and that's unfortunate.
I would say if you took San Francisco out of the equation, San Francisco clearly, I read a thing where somebody did an analysis that said 35% of office buildings in San Francisco were empty.
Right.
And they have actual parts of town like Tenderloin and some of the less desirable parts of town, they're completely empty.
Right.
They're completely empty buildings. There's nobody in them.
Right. Okay, so let's attack that two different ways. Just because they're empty does not mean that they don't have equity. And it does not mean that those owners will default. So that's the first thing.
Right.
The second thing is it doesn't mean that they will not be repurposed in order to alleviate some need or to deal with that vacancy. So again, those are things to be considered. The thing that you can count on is that none of this is static. All of this is very dynamic. Things change, and people find opportunities. We talk about this all the time. People make money in a down market, people make money in an up market, but more people make money in a down market. So there is money to be made. I'm sorry for those that are having financial difficulties, but at the same time, there are opportunities for others.
This is not a macro problem. This is a specific problem for some specific banks and some specific cities, maybe, but it's not. The 4 of the last 6 recessions, home prices have gone up. Mm-hmm. Recession does not mean home prices go down. If that was the case, then everyone on the planet, as soon as you heard the word recession, would just run out and buy a house. So you could say, I bought the bottom of the housing market. And that has never been the case. And then the other thing, too, is that the banks do not affect real estate. Banks, whatever happens with banks, because banks aren't, for the most part, especially regional banks, don't do home loans. You can't go to, your regional bank and go get a home loan for the most part. They can't compete with mortgage companies. Your regional bank, look, it's so competitive. Wells Fargo got out of the business. You cannot get a loan from Wells Fargo, a mortgage loan, unless you're a portfolio client. They're managing a lot of your money. So you can't get a loan from Wells Fargo. It's too competitive. You know why? Because Wells Fargo can't compete with all these online mortgage companies. They can't compete. They can't give you the low rate because they originate these low rate loans and sell them in the secondary market. So your regional bank sure as hell can't do. They can't compete with that. They don't have the infrastructure and the economies of scale to do it. So regional banks, what they have the ability to do is they have the ability to give loans on things like commercial buildings and things like that. So they're the ones really most at risk. But like I said, for the most part, a lot of these have SBA. They're SBA loans on a lot of them probably. They do have some kind of insurance that they'll get paid out. And it's going to be painful, but who's going to lose is the investor, the guy who bought the building, the investment group or whoever. There was just a building that was $300 million and it sold for $60 million. Was that it?
Something like that, yeah.
Yeah, it was $300 million and it sold for $60 million, 20% of its value. And the people that bought it just said, we're just going to sit on it. We're just going to wait for it to recover because someday it'll be worth $300 million and we'll just, even if it takes 10 years, it's a good investment for us to just leave the thing empty. So bottom line is none of this is going to affect residential. Only thing that's going to affect residential is residential. So mortgage rates to some extent will affect it, household formations and new home building. Those are the biggest things. If we keep creating more households faster than we can build, home prices are just going to go up.
Right. So what do you think? What's your take on the whole commercial thing? We want to hear from you. Please leave us comments. We appreciate your comments. You do not have to agree with us. We welcome all of your opinions. Please like the video, subscribe, hit the notification bell. Take a guess as to where we are. That's always fun.
You can't say there's a river behind you.
Yeah.
More specific.
You can't say.
Well, what latitude and longitude?
You can say whatever you want.
Okay.
And that's totally fine.
We'll tell you in a while.
Maybe.
A couple days, maybe.
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 Okay. So anyway, like the video, subscribe, hit the notification bell, share the video, leave us comments, tell us where we are, and we will see you on the next video. Bye.
Bye.